Okay, guys, let's have a quick catch up here and do a little bit of a market briefing. I mean, we're right in the thick of the action, so I'll try and keep this brief. Big movement across the board here, mainly led by, I would say, German markets. You've had the DAX, and Euro stocks down, breaking yesterday's low. Now, this hasn't happened on the S&P. The S&P's a little bit more resilient to this downside, but just a little bit more of that same fairly intense momentum on the downside. The risk-off theme, when you look at equities and bonds, then it's the risk-off scenario that shaped and dominated a lot of yesterday's price action, and more of the same, just more of the same this morning. You've got oil price moving to the downside again. I'm just going to bring up the price of oil here, which is on the daily chart. We are new lows, below $55, and this continues the theme. The theme being, and I talked about this yesterday, the correlations have flipped. It's actually the lower the price of oil goes, the worse it is for equities. It should be the other way round if you're just looking at this from the aspect of, lower energy costs must mean this is good news for the economy, but it's switched. It's actually, the lower this price of oil goes, then actually the more concerned we are about the weak global growth outlook, and this is been highlighted by the Chinese manufacturing data overnight. The Chinese figure coming in worse than expected, marginally worse than expected, but remaining below 50. Telling us that the Chinese manufacturing situation remains a concern going into year end, despite the fact we've had a broad-based interest rate cut. So this has helped to just continue what is just a phenomenal trend here. But I'd say the big news overnight wasn't really, I was going to say it wasn't really China. I mean, it is important news, clearly. And I'll talk about the Japanese news in a minute, but the big event overnight was, of course, the Russian interest rate hike. So Russia, emergency or desperate attempt to stabilize their currency, which has collapsed by 50% and more this year to record ever lows. So the Russian central bank stepped in last night. In the middle of the night, they implemented a 6.5% interest rate hike. They took interest rates from 10.5% to 17% in one foul swoop in an attempt to stabilize the currency. What did the currency do? It immediately appreciated by 9%. Where's the currency trading now? Record lows. So their attempt, and I spoke about this yesterday, Putin's attempt to scare off the speculator again has completely spectacularly failed. I'm going to bring in a chart here. I've got a futures chart, but it's not a very good one because the volume isn't very good. So unfortunately, I'm just resorting to not a very good chart either. But this is the ruble over the last. This is looking at yesterday, and you can see the big spike to the downside. This is the dollar versus the ruble. So when this thing moves down, that means that the ruble is strengthening. If this thing goes up, the ruble's weakening. So you can see the rate hike spike to the downside last night. Now this chart is delayed, it's not up to date. So we do have, I can see the ruble is testing yesterday's low or yesterday's high, depending on which way you're looking at it. So the ruble is now on record ever lows, despite the fact the Russian central bank hiked interest rates from 10.5% to 17%, despite a 9% rally last night. All of that 9% move gone. So quite sure what the Russians can do more. It's a 6.5% interest rate hike, billions of dollars they're ploughing in, or I should say rubles, they're selling and buying dollars, trying to prop this thing up, and yet it still collapses. It's the correlation with oil is very, very high and positive. So if this oil price continues to drop, the ruble's going to drop. I think Bill mentioned earlier, really all Putin can do is cross his fingers and just hope this oil price stabilizes and moves back higher, because until that happens, I can't really see any respite for the ruble, any respite for the Russian economy whatsoever. So really any central bank intervention at the moment is just a great opportunity to get more short. it's short the spikes. Any central bank spike, get short, because new all-time lows are coming. This is the strategy, and as it stands, speculators are in charge. They're winning the fight. So dramatic news from Russia, and it continues to be very, very, very desperate. I was reading an article in the FT this morning. You're getting some of the shop owners now in Russia begin to price their products in dollars rather than rubles, because the rubles collapsed in value, and it's getting kind of ridiculous. But actually, it's illegal. It's an actual rule. It's a law. Shop owners are not. It's illegal for them to price things in dollars, but it's happening. Such is the desperate situation. So Russia continue to get squeezed. Now, overnight, just talking about oil and talking about the yen, let's bring the dollar-yen chart in here, because we're getting some fairly interesting movement again today. And let me just bring in the yen chart on the daily basis. So here's the daily chart for dollar-yen. And it's been a radical quarter four, mostly this is the spot market. So when this moves higher, this is yen weakness, dollar strength, and just a sensational meteoric rise to the 122 handle. But look what's happened over the last couple of weeks. Big reversal. And especially if you think about over the weekend, Abe won a landslide election. He's locked in till 2018. Abenomics here to stay, which should be negative for the yen's value, but it's not. It's been positive. Now, overnight, Japan issued their manufacturing data for the month, and it came in at a 7-month high. And this is because, out of anybody in this world, right up towards the top of the list, those who benefit the most from cheap oil is Japan, because they have to import the whole lot. So looks like cheap energy costs beginning to feed through in a positive way to Japanese manufacturers, indicating that this recession that Japan finds themselves in may not be in it for much longer. So this is positive economic data. This is perhaps Japan beginning to see the benefits from cheap energy, and this big weakening phase in the yen is now being given back. So very interesting news overnight. Bad news on manufacturing from China. Very good news manufacturing from Japan. The most dramatic interest rate move, well, really in Russia's history last night, that completely failed to stabilize the Russian currency. Oil continues to tumble, and as it stands, the sort of general risk-off vibe continues. So to say this is interesting times would be a dramatic understatement. Here's the calendar for the rest of the day, because we've got more news coming. So in 3 minutes, we've got Eurozone manufacturing data for December, preliminary reading. We want to see an increase on last month's 50.1. We want to see it up at 50.5. Services, 51.5. So these are the forecasts. We're then going to get important UK inflation data. That's due at 9:30. Will give us a signal, because inflation dropped to 1.3 last month. That was a new 4-year low, I think, and we're expecting it to go lower. So forget the rate hike situation. Inflation's actually on the downside, and so this will be important for sterling. We got important German data at 10, ZEW survey. We then got housing data this afternoon from the US, as well as their manufacturing PMI. So it's thick and fast, but we certainly, these markets are really in panic mode almost with some of this risk-off movement in stocks. It's year-end profit taking. It's oil continuing lower, now being seen as a big negative for global growth. I'm going to send an article on oil. I'm going to talk about oil a bit later after we get through this data. Great article in the FT this morning, going around the different countries in the world and picking through the detail as to what low oil prices mean for each territory. So to give you a quick flavour of this is what I'm going to be talking about, the winners and losers of the oil price plunge. So that's going to be coming up, but let's just clock in on this Eurozone data. It's due in 30 seconds. Thanks.